Good morning. Today we are going to work on a problem in which we are going to prepare an income statement, statement of retained earnings, and a classified balance sheet. So in this chapter, our objective is to learn how to prepare this classified balance sheet because it's going to help us do a lot of financial statement analysis subsequently. So let's take a look at what a classified balance sheet should look like. So let me start with the screen share real quick over here. Okay. So in a classified balance sheet, we have our assets, liabilities, and owner's equity. That part doesn't change. What is different now is how we group our assets and how we group our liabilities. Our assets are typically grouped in 4 categories: current assets, long-term investments, property, plant, and equipment, and intangible assets. I'll go over each one of these and explain what they are. Liabilities are grouped in 2 broad categories: current liabilities and long-term liabilities. Stockholders' equity is the same. You'll have common stock and retained earnings. Let's take a look at each of these items, what they are and what they mean. So let's start with our current assets. Current assets are those assets that a company expects to convert to cash or use up within 1 year or the operating cycle, whichever is longer. This is a standard definition. So basically, these are assets that are closest to cash. I expect them to convert into cash or I'm going to use them up. So obviously, the first asset we're going to list over here is cash itself. It's already in the most liquid form. The second one is accounts receivable because we expect to collect the money from our customers. Typical terms for most business is going to be 30 to 90 days. If my customer doesn't pay me in 30 days, I'm in a lot of trouble. The next item I would list would be supplies. These items are consumed internally. They're not going to be sold. They're going to be consumed internally by a business. I'd explained this in the previous problem. If I'm an accountant, the supplies I'm going to use are pen, paper, cartridge. All of these are just consumed in the process of providing accounting services. The last item I would list would be any prepaid asset, something like prepaid insurance, prepaid rent. Typically, these assets are not expected to convert into cash, but I'm going to get the benefit out of it over the next 1 year. It could theoretically convert to cash if I cancel my contract, but that would mean I probably am going out of business and I don't want to hear that. So once again, the company is going to list current assets in the order of liquidity. That is the order in which they expect to convert them to cash. So let's look at the next item, long-term investments. So you have 3 categories over here: investment in stocks and bonds of other companies that I expect to hold for more than 1 year. Remember, if it's long-term, more than 1 year. Long-term assets such as land and building that I'm not using, I'm just holding it. I may be holding it for speculative purposes, or I may be holding it in order to use it in a future date when I have some plant expansions, etc. And the third is long-term notes receivable. Remember, under current assets, I talked about accounts receivable. You could also have notes receivable that are current, which means they're going to be due within 1 year. Long-term means it's more than 1 year. Typically, I've given someone a loan and I've told them that they have more than 1 year to make the payment. And remember, I'm not a financial institution. I'm not a bank. That's not my business. Okay, the next item, property, plant, and equipment. These items are used for more than 1 year in a business. If I buy a car, I'm going to keep it for more than 1 year. Now, if I'm a car dealership, car is inventory, we'll look at that later on. But for something like an accounting business, a car is going to be an asset that I'm going to keep in use. Computers, furniture, fixture, I'm going to keep them and use them for more than a year. These assets are going to depreciate. Depreciation in accounting simply means writing off the asset over the life of the asset. So if I bought a computer and let's say I spent $3,000 and I expect to use the computer over the next 3 years, I don't call it computer expense the day I buy it. We call it computer, which is property, plant, and equipment, and I will write it off. That's depreciated over the next 3 years. Using the straight line method, it'll be $1,000 a year. I spread the cost. That's what depreciation is. And then finally, we have intangible assets. As the word suggests, intangible means it does not have any physical substance. However, they're valuable. So a company has a legal right. All intangible assets typically are legal rights. So a trademark, a patent, it's a US government office that gives us these rights. We register with the government, and that's how we have these assets. Under liabilities, you will have current liabilities, which is going to be any obligation that you have to meet, that you have to pay up within the next 1 year. You either have to pay or you have to deliver goods and services within the next 1 year. Long-term liabilities, obviously you have more than 1 year to pay it up. So it's beyond the current year. So technically every long-term liability eventually will become a current liability. It gets reclassified as a current liability. Stockholders equity, we already know, has only two parts. It's common stock and retained earnings. So now that we've reviewed what a classified balance sheet should look like, let's take a look at the problem. So the problem tells us that Martin Corporation for the year 2022 has the following information, and we'll get to this in a second here. I have created the shell for my three financial statements: income statement, statement of retained earnings, and balance sheet. Once again, let's recap a few things. Every financial statement must have the name. So I have Martin Corporation as the first line. Second line will have the name of the statement. Third line is the period. So for the income statement and statement of retained earnings, it's for the year ended. Balance sheet is always as of a date. In the income statement, you have revenues, expenses. The difference is going to give us net income. Statement of retained earnings, always standard format. Retained earnings beginning balance. This date I should have actually, let me correct that. As of the end of last year, what was my retained earnings beginning balance? I'll add net income. That'll give me a subtotal. I subtract dividends, anything that was paid out, and then I will have my retained earnings ending balance. In the balance sheet, I have assets. Now I have my assets classified as current, long-term investment, property, plant and equipment, and intangibles. Liabilities will be current liability, long-term liabilities. Stockholders equity is always common stock and retained earnings. That part doesn't change. Now, we've been asked to prepare a classified balance sheet, so I've highlighted that in red. Now, if you go to Wiley Plus, the same problem, you will see that they've given us some information. For the income statement, they've told us enter negative amounts using either a negative sign preceding the number or put it in parentheses. The retained earnings always list items that increase it first, so net income will go first, and then dividends will go because it's subtraction. And then the balance sheet, they've told us current assets to list it in the order of liquidity. So not only do I have these items listed this way, the current assets will have to be in the order of liquidity. So let's do something over here that will make things move very fast. I now look at my, this is essentially a list of accounts, which is a trial balance, but I'm just going to call it a list of accounts. Each of these and identify which statement it goes into and what I would classify it as. So basically, basic classification is revenue, expense, asset, liability, owner's equity. But we have some more over here. So retained earnings beginning balance, obviously I know what this is. It's in the retained earnings statement. Utilities expense, I know what this one is. It's an expense. Equipment, this is an asset. It's property, plant, and equipment. Accounts payable, go down. That's a liability, and it's a current liability. Accounts payable means these are monies I owe my vendors. Cash is pretty obvious. It's an asset, current asset. Salaries and wages payable is a liability. Will it be current and long-term or long-term? Obviously current. I wouldn't work for any business that says it's long-term. Employees expect to be paid as soon as it's due. So typically you have this in your books only because of a timing difference. Let's say, for instance, the employees are paid on the 2nd and the 4th Friday of the month, and you're preparing the financial statement. It's somewhere in between that 2nd and 4th Friday, you will have salaries and wages payable. Common stock is equity. Dividends is going to go in the retained earnings statement. Supplies is an asset. Debt investment, that is, I've invested in another company's debt, and they've specified long-term, which means it's a long-term asset. Trademarks, that's an intangible asset. Revenues is revenues. Prepaid insurance is an asset, a current asset. The next one, expense, expense, accounts receivable. I will receive. It's an asset, current asset. Insurance expense is an expense. Salaries expense, expense. And accumulated depreciation is a subtraction from your asset. So I'll put it as an asset, property, plant, and equipment. Technically, it's a contra asset account. In a subsequent chapter, we'll go over that at great length. So now that I have that laid out, I'm ready to prepare my 3 financial statements. And let me see over here. I've scrolled this up so we can see everything in one screen over here. So I have all my accounts. I know what they are. And I have my 3 financial statements ready over here. Again, as I had mentioned in the previous exercise, we have one of 2 ways in which we can do this. As I've already identified what these accounts are, I could prepare one statement at a time, or I can go down the list and take each item and put it in the relevant place. So in this case, I'm going to prepare one statement at a time. When you look for revenues, there was only one revenue item. I'm going to highlight that real quick so I know it's taken care of. I have one revenue item. And again, what I'm doing is I have an inside column and an outside column, both for the income statement and for the balance sheet. My expenses, I have a whole bunch of expenses. I have my utility expense. I have, I'm going to try and put this in a different color if I could, that we can actually see. Utility expense. We have depreciation expense. We have maintenance expense. What are my other expenses? Let me look at insurance, salaries and wages. So I have one, going down the list, expenses. I have 1, 2, 3, 4, 5 expenses. I'll list all these expenses over here. So I've listed all my expenses and I'm putting these numbers in parentheses over here. Then I have retained earnings, beginning balance, which means it was ending balance for the previous year. So I need to bring that number over. And where was that number? That was the first one that we had over here. Again, I'm going to use a different color so that we can continue to see these numbers here. Retained earnings. I brought that number over here. Then I need my dividends. Remember, net income is a calculated number. It won't be given to me. So I need to wait to put that in. Dividends, that number has been given to me over here. And I have my dividends. It's listed over there. Now I'll move on to my assets. I need my current assets. My assets, current assets. Let's look for those assets. Let me first highlight each of those, and then we will talk about what order we should place them in. I have my cash. I have supplies. I have prepaid insurance as a current asset. And I have accounts receivable. That's a current asset. So I have a total of 4 current assets. Do we see anything else? No, we have 4 current assets. Which one goes first? Cash is going to go first. Next will be accounts receivable, then supplies, and then prepaid insurance. So in this case, the order in which you list these assets is important. If you notice the expenses, I just put them in the order in which I found them. It didn't matter. Again, most companies would put the largest expense first and then list in the descending order. But it's not important, as in it'll not be marked wrong for us. But here the current assets have to be listed in this order: cash, receivables, supplies, and then prepaid insurance. So now that I have listed all of my assets over here, okay, long-term investment, I have one of those. Again, I'm going to go with a different color. Long-term investment, I have one of that. Oops, my mistake there. I should just put this. Okay, property, plant, and equipment. I have equipment, and then I have accumulated depreciation. So I have 2 items over here. So equipment and accumulated depreciation. Both of those are going to go here, but you will see how they're being placed. First, equipment. and then it is less accumulated depreciation on equipment. So I'm doing that subtraction. I'll have to do that subtraction, okay? And then intangible assets, I have trademarks. I'm going to run out of colors here. Trademarks, okay? And then I come down to my liabilities. What do I have left with liabilities? I have accounts payable, salaries and wages payable. So I have two of these. So accounts payable and salaries and wages payable. Do I have any long-term liabilities? Nope, I have taken care of everything over here, except common stock. Common stock is the last one. And again, trying to come up with a unique color is going to be difficult, but here, common stock. I have common stock over here, and I'm going to put the amount. Oops, what happened to my common stock? Here was my common stock. Okay. Okay, so basically every item over here that was given to me has been put into one of these three financial statements. When you're doing your exercise, it's a really good idea to make sure you put a check mark or something to indicate you've taken care of it. Once again, revenues minus expenses will give me net income. The order in which I list my revenues and my expenses is not important. Assets, liabilities, owner's equity, if it's a classified balance sheet, you have to list them in these group. You have to group the assets and liabilities, and then the current assets have to be in the order of liquidity. Okay, now that I've taken care of that, let me add up the numbers. I have only one revenue, so my total revenues is 68,000. I have 5 expenses, giving me total expenses of 46,600. The difference between revenues and expenses will give me my net income. And let me quickly check if that net income number I have is correct. 21,400. Yes, I'm on a good start over here. I carry that number over here, the net income number. So let me put this in a color that we can see. Probably red is not a good choice, but that's fine. That number comes through over here. So I had 31,000 from the previous year. I earned 21,400, giving me 52,400 available for the stockholders. 12,000 is given out as dividends. So what remains with me is 40,400. Now again, remember this number, 40,400, is going to come over here. And let me bring that down here. Make sure I have the correct reference. At 40,400. Oops, I put it in the wrong spot. Let me see if I can move it here easily. Yes, I did, thank goodness. The wonderful world of Excel. So we have 40,400. Now let's move on to the balance sheet. I have 4 current assets giving me a total of 28,400. I had only one long-term investment. That's 5,700. My net property, plant, and equipment is 48,400. Net means the gross amount minus accumulated depreciation. I had only one intangible, giving me a total of $2,000. I add up all of these amounts to come up with my total assets. Now my total assets is 84,500. Again, let me double check the check figure that they had given me, 84,500. So I know my assets are correct. So this part is all good. Now let's continue on over here. I had two current liabilities for a total of 21,300. I had no long-term liabilities. So for long-term liabilities, I didn't even have to list the item, but I just did it to tell you that there are two categories of liabilities in a classified balance sheet. Then we have common stock and retained earnings. When you add these two numbers, let me go ahead and add these two numbers. I come up with a total of 63,200. Now liabilities plus stockholders equity will give me hopefully the exact same number that we had over here. And that should be the 84,500, the same number that you had over here. Again, let me try and put this in a different color. Should be this exact same number over here. Okay, again, when we are going through an exercise along these lines, it is always a good idea to start with going through the list of accounts and identifying what those accounts are. Will make your job very easy subsequently. Income statement has revenues and expenses. Always list the revenues first, and then you list your expenses. Statement of retained earnings, always. The format is retained earnings beginning balance, add net income, less dividends gives you retained earnings ending balance. In the balance sheet, it's asset, liability, and owner's equity. Again, the assets should be classified as current assets, long-term investments, property, plant, and equipment, and intangible assets. Current assets must always be listed in the order of liquidity. And these items are always listed in this particular order because it is the order of liquidity. Your liabilities are current and long-term. Your current liabilities are basically those that you expect to pay up within the next 1 year or the operating cycle, whichever is longer. Long-term liabilities, you have more than 1 year to make those payments. Stockholders' equity will always have only two items. You have your common stock and retained earnings ending balance. Again, these three statements are connected. Income statement, the net income number goes into the statement of retained earnings. The ending retained earnings number from the statement of retained earnings will go into the balance sheet. So these financial statements should be read as a set. You shouldn't look at any one of these in isolation. The purpose again of preparing the classified balance sheet is for analysis. A lot of ratio analysis can be done very easily if the information is presented in this format. So I hope this helps you work through this exercise, and we will move on to the next chapter fairly shortly. Good luck.